Okay, starting the recorder.
Hey Charles, just real quick too, we've got a swing on Russell at just under 705.90 at 705.80.
Mm-hmm.
We're going to have to really watch. Tried to get there, but it missed it by a few ticks.
Right. So what I would suggest is this. By the way, how many folks do we have in here who are on free trials or just kind of in here, you know, learning about our system and watching the room and trading and just sort of learning how to trade? How many? Just take a quick straw poll of the folks that are still in here today. Anybody else still on a free trial or kicking the tires a little bit in here, kind of learning our system and, you know, sort of dipping your toe in futures trades? Okay, good. We got a lot of folks in here. Okay, good. All right. Well, welcome everybody. We got a lot of folks that are members that are still in here that come in and trade with us every morning, and we got free trial folks. And see, we're breaking support on NASDAQ here. This NASDAQ instrument, and here's YM, these are both $5 a tick. EMD is $10 a tick, and so is the Russell TF that Gary likes to trade. But you can see here they all have very similar movement. If you're just beginning, I would strongly urge you to simplify. For instance, on Steve's response to our question on what you're trading, I think he listed like 4 or 5 instruments. He had crude oil, and some of you may be doing this. Okay, let me go back here. It's crude oil, Russell, 6E, and NASDAQ. Now, if you're just starting, you're in a free trial, or you're learning the system, or just new to futures trading, I would strongly urge you to cut way back. Okay, I would suggest going with 1 or 2 instruments. And I would go with the low flyers in the beginning. And when I say that, I mean like NASDAQ. Okay, this is a good little instrument to learn on. You can see here that this has only taken 1 trade here so far. 7:38 was the high energy time right here, and that's when this little one shot fired up right here. See, it was consolidating and breaking, and we called the breaks in the room. We took this initial short, and then Gary called the probe trade rollover that you're seeing it still in right here. This is a great one to learn on. This one shot is part of the Pro package, which includes the line trader. And you know, you're not going to get too beat up on this if you're just learning. And here again, the whole goal when you're going through this sort of transition stage between demo paper money and live trading is not to make a ton of dough. That's not your interim goal. Your interim goal is to learn the system and how to trade it profitably, and to find an instrument that you're comfortable with. You can see here, for instance, that if you just let one shot take this one trade, it's up $350. I know a lot, and that's trading 1 contract on NASDAQ with a 15-tick initial stop. So your risk on this trade was only $75. Okay, and that's usually acceptable risk for most traders, $75. Is that acceptable risk for everybody here? Same with YM. 15-tick initial stop, $5 a tick. You see here, for instance, it got into a bad trade. Here, let's look at YM real quick. YM got bit right out of the gate here at this high energy time. Here's a good example right here. See, it flipped, took the short, came all the way back on a 15-tick bounce, stopped out, full stop out. So you were down $75, right? See, it bit you. And then, of course, you see what it did. It took a probe trade reentry right here, and now it's trailing the stop, and it's made back all the loss and then some. YM can be a little woolly beast. I mean, you can watch it. It's $5 a tick. You know, sometimes it follows the other markets, sometimes it doesn't. I'd be careful trading YM myself. I think NASI is a little smoother. By the way, I want to show something here on EMD, for instance, is up $59, almost $600, by the way, on this same move. EMD, you see here, almost stopped out on that bounce, and then you could have re-entered. The opportunity to re-enter on EMD was right here on the probe trade. We call these probe trades because what's happening here is that the market has, as you can see here, typical price action in these markets. You have a break and a thrust in a given direction. Then the market retraces, and clearly you can see you're in a downtrend. Right here, we teach this in our webinars. If you haven't watched the videos, I would strongly urge you to watch those. We teach how to interpret what's going on here. But you were looking for shorts. You were looking for a break. You were looking for a retracement, just like Gary called on the Russell. We were looking for it to roll. When we say it's going to roll, that's what we're talking about, right? We say that the market has thrust in this way. It's come up. It's retraced very deeply. It's turned yellow. In this case, it turned blue. This is called a deep deep probe here. See it? Deep probe. Here sometimes they turn yellow. And so when we say we're looking for it to roll, if you hear that statement, what we're actually saying is that we're looking for it to find resistance in a downtrend and roll over and give us a reentry. That's what we're saying. That's what that means. I know some of the folks earlier were like, well, I don't really get your terminology. What are you talking about? So that's what we're saying. When we're looking for a probe trade, we're seeing that the market is in a downtrending move. We're seeing the fact that it's retracing. Now, we stopped out of these trades down here. You can actually take your stop. Some traders do this, and we'll show this tonight in the webinar, and we'll record it too. There's different ways to trail your stops. Okay. Here, if you'd taken the break up here, for instance, on EMD, or you shorted a higher level, either way, you're short. Now, some folks use a combination of the trailing stops, which are right here, and the thick, chunky, stealthy line here. See this chunky, stealthy, thick line here? Some traders use the stealth line as a trailing stop. See how it hugs the prices tighter? So you have a little bit less drawdown at the end of a trade. What we say about drawdown is when a market hits a swing bottom like it did here at 56 and it starts to retrace, if you notice what's happening here is at the end of your trade it's drawing down the profitability. It's happening right now. Here's another good example. See how we thrust down to this 53.90? Remember this trade was up $700 at one point? Right here, see it? This is called drawdown. What's happening is the market has thrust in a given direction, in this case about 60, 70 ticks, and now it's retracing and it's taking some of your profit away. The further your stop is away from the price action, the more profit you give away at the end of a trade. See that? I don't have an 8 or a 12 on here. I do have a 10 on another screen on NASDAQ. Jesus, I'm going to drag over in just a second. So just hang tight on that. I'm going to show something on NASDAQ that I think you're going to like a lot. But that's what that is. Now, if you hug your stop, in this case, say on this short trade here, you hugged it tight to the stealth line like such. You can see here it would have taken you out before stopping you out here at the stop dots. See the difference between these two? Now, the disadvantage of that, having your stop too tight, of course you could have re-entered, right? You see the re-entry, all right? But in this case here, let's take a look at what's happening now. Let's come down here and say that you had your stop sitting behind stealthy. These bars right here would have actually stopped you out on the short, again, which is not necessarily bad. But you can see what's happening though, right? If your stop, let's do another thing here. Let's say your stop was right here, excuse me. Notice how sometimes we'll have a little wider stops and put them at the dots, which is giving you more drawdown at the end of the trade. You're giving up more, no question about it. However, in this case here, you can see that we just had another probe trade that's set up here. This is the disadvantage of having your stop too tight. See? If your stop was sitting right at stealth and it stopped you out, you're now missing another drop on the trade, which is happening right before your eyes. See it? So that's why in the room when we hear us calling out different levels and we're saying things like, I've got my stop at 55.70, or I've got a little bit looser stop up here, 55.80, or whatever the number is. That's what we're talking about. We're saying our stop is sitting here. And in some cases, we give it what we call wiggle room. This is the wiggle room we're talking about. We say, I'm giving it some wiggle room because I think it's going to roll and break lower. This is what we're talking about. In other words, if we say you could have a tight stop right now at 55.10, but I'm going to leave a looser stop at 55.80 because, as you can see here, what did the market do? Oh, they are just hammering this. Now, we just hit a profit target on NASDAQ. We just hit it. $400. You just saw it. 80 ticks. It just ran 80 ticks straight down, and it just hit a profit target. Now, if you have an 80-tick profit target, I'm going to tell you something straight up. If you're using these auto traders, here's what you want to do. All right? Here's what you want to do. Check this out. All right, you want to come over here now, and you want to turn off your shorts and turn off your longs. Because what could happen here after it hits this target? See it? It just hit it. I mean, it literally just hit it as we were watching it. What could happen here is that if conditions are such that re-entry is met, it would fire another trade and get in, and sometimes it'll do it right at the exact bottom. Okay, and you don't want that after it's dropped 80. Well, technically it's dropped like 120 ticks off the swing high up here. All right, so you come in here and you turn off your shorts, turn off your longs, and you're done. That's it. $400, you bank the coin. We call that one and done. You know, over here, I'm not going to get into all the trades from this morning. I'll do that in the webinar tonight. But all I'm trying to show here is if you took one trade on NASDAQ from the high energy time of 7:38 here, it took one short, almost stopped out by just like a tick right here, and then hit a full profit target, and you're done. That's it. I mean, how many of you would be happy with $400 on one trade in here? Anybody? $400, one trade, NASDAQ. That's it. And maybe that's your profit goal for the day. We call that one and done. That's it. You didn't take anything else. In fact, say that you ignored all the chop from this morning and you took one trade at the high energy time. That was it. $400. I mean, over here, for instance, you can see that because it's $10 a tick, obviously, they're just hammering. I mean, the Dow, I think, has given up all its gains. Shorties are back. This was just bear food. But here in this case, here, obviously, we've not hit. I mean, we're just trailing a stop on EMD. Now, here's the thing on EMD. Check this out. It's dropping lower, $900. You know, some of you might be happy with $900. Okay. Let's see. Nasir's saying there's a high energy time coming up right now. Well, this could turn out to be a swing low. Now, if you're happy with $900 or $1,000, we might hit $1,000 on EMD here. Here's what you can do. You turn off your longs, toggle off your shorts, okay? And then whenever you could drag your stop down. Here's your stop sitting way up here. All right, so here's what I'm talking about. If this market retraces all the way back up here after this beautiful drop, here's how much drawdown you're going to give back right there. You're talking about probably 30 ticks, about 52 to 25 ticks. Now, if you don't want to give back $250 at the end of this trade, it's up 900. What you can do is this. Here's the stop. Here's where your stop is physically sitting. Like if I pulled up see it just moved. See the dot move? See the dot move? It just physically took that stop from your broker and put it right there. Okay, and that's obviously a swing level and a very good stop. But there's other places to put your stop. See the stop dots right here, trailing stop dots? You could drag it down here and cut your drawdown in half. The way you do that is you go onto your dome or your chart trader chart, and you physically draw it down. I don't know if I have that on another chart.
Hey, Charles, got another good way to do that.
Yeah.
Use that old crank stop Rich designed.
Crank stop. Crank stop.
Yeah.
Yeah. Now, you see here, for instance, here's another one. Here's Stealthy sitting right here. This is a little bit tighter. This would cut your drawdown at the end of the trade down by 2/3 right here. And as she continues to drop, is you have swings and you have stealth and you have your stop dots. And this is too loose for you. You know, it's already dropped over 90 ticks here. You just drop your stop until at some point you crank it down and you get out. See, everybody see the trailing stop strategies we're showing here? This is really important. You're doing two things. You're preserving profitability. Did NASDAQ get back in a trade? I thought I turned that off over here. Oh, no. It's an old thing from somewhere else. I think it reshorted it. Huh. Sorry, go ahead, Gary.
It's flat on that one.
Yeah, okay. Because I think I toggled them off. And I toggle them off here, too. Same with YM. Okay, here's the thing. We're happy with $300 on YM. We don't want to take any more trades. We're going to turn this off. And we show how to do this in the pro webinars, too. Okay? And if you want to get out, you don't have to trail stops either. If you're happy with $310, you can hit this closed position, and boom, it'll just get you right out, straight up, and you're done. With these toggled off, it will not take any more trades. For the heck of it, let's just see what it does here. Let's say you drag your stop down here to 53.10. Let's see if we get stopped out on this bounce. And let's say that you took the YM stop down to here. Let's call it 433. So here again, I think this YM trade was up over $400 at one point. It's up 310. If it continues to bip up here, you're going to probably, your stop is actually physically sitting here. But what we're suggesting is that in some cases you might want to draw it down to either the stop dots or Stealthy. Now in the case of YM here, I'm going to blow this up. If you had a stop sitting close to Stealth, that bar would have taken you out right here. And the trade-off we show all the time is that if it's too tight, sometimes you miss a continued breakdown run. In this case, obviously, if you had your stop on YM at 433, this would not have stopped you out, and you would still be in the trade. So, the stop dots are usually a good place to go. You see it's splitting the difference between the trailing stop on the on one shot and stealthy. Here we go, fresh lows, 950. EMD, you could be dragging your stop down into here. Fresh lows on NASDAQ. Dow's only up 29 and a quarter. S&P's up 4 and a quarter, under the 1200 mark. Steve, yeah, I would say for now, I would watch on the equities, EMD and NASDAQ, and be very selective. If you're going to look at trading, I would suggest you only trade in the very beginning. Okay, as you're learning, this is what we're suggesting. As you get more experience and you learn the system and you're comfortable taking trades, you can take other instruments. You can trade other instruments. I would really urge you not to trade Russell. It's very whippy and bouncy. It takes traders with some experience to trade that kind of instrument. It's very fast. It's $10 a tick. It can take 15 tick retracements in your face in a heartbeat. I just think it's really not a good one to learn on. I think NASDAQ is a good mover. You can make a little bit of money. And here's the thing. We got traders in here that just trade NASDAQ, and it sounds silly, but they'll put 5, 8, 10, 12, 15 contracts on it. And they'll clean up and make $2,000, $3,000 a day because that's all they do. They just watch NASDAQ and they look for breaks. So what I'm trying to say is this: the whole idea is to get in sync with an instrument you're comfortable with. They just hit $1,000 on the CMD trade, by the way. It's dropped 100 ticks from this break up here. Yeah, the whole idea is to find an instrument you're comfortable with, learn its movement, find out how it moves. Take the trades. Man, they are just slamming this thing. Smack a bony.
Swing coming up, Charles, on Russell at 702.30. They just hit its major swing on a 10.
Yeah.
So you're going to get some retracement right there.
I don't think the swings are going to hold.
Well, it doesn't look like it. They're hammering patterns.
Well, you got a little divergence in the cash. I think you're right, Rich. Mm-hmm. Dow's only up 22 and a quarter, and NASDAQ cash market's actually negative.
Next swing,
when the Dow goes negative, then they're really going to be
accelerate to the downside, probably. Yep. Yeah. Just for the heck of it, I'll tell you what I'm going to do. I'm going to toggle this back on and reload this strategy just for the heck of it to see if it re-entered. I bet it did. I can reload the strategy here, right? Yeah, do it right here. See if it re-entered, just for the hell of it. Bounce off that profit target. See, now this is where we want to turn off your no, it didn't re-enter. Interesting. Just took its profit target and stopped out.
Oh, we just made new lows on the day in NASDAQ today. New lows on the day. So well, let's see if they continue.
All right, so if we're going to trail our stop is actually sitting way up here physically, but we could drag it down here and we could put it at 51.50. See the dots in stealthy? Right there, that would be your stop. This is your continued move off the probe trade. See, this is a nice thing. If you miss the initial breaks, normally when you get a retracement in a break, you get some nice movement. See how whippy YM is by comparison? I just want to contrast the two. See the deep retracements? It almost behaves a little bit like Roosty sometimes. See these bounces? This is what I'm talking about. This is the price action I'm talking about. See how it'll break a low and then it'll bounce right back in your face, and it'll come down, test, and break a low by a tick, and then boom, 12, 15 ticks right in your face. If you're comfortable with this type of price action, by all means trade it. But I'm telling you, there's other instruments that are a little smoother. Take the difference in this move here. I'm just going to highlight a move between the two real quick. Here's a YM move down. See how choppy it is? See it? I'm telling you, what you're going to feel is this. You get in here, you're going to feel 10, 12 ticks of heat. You're going to get down here, and you're up 25 ticks, and the boo takes half of it away. Now contrast that move with this move on NASDAQ. See how smooth this is? Just down, 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 down she goes. And, you trail your stop, and then when it takes it out, you're done, and you look for re-entry. This actually turned out to be a yellow bar probe trade to the downside. See it? Could have re-entered if you wanted to. If you're going to trade, the thing you can do is this. I like to put a couple of charts next to each other. I like to have EMD and NASDAQ next to each other. I wouldn't put more than just that if you're learning. I wouldn't have a Russell and a YM and 15 other equity charts up like ES. I would just have 2, like this. Here, let's put YM somewhere else. Here, I would just do 2. I would just I would just have EMD and NASDAQ, and then actually pull the trigger on the NASDAQ chart, or let the auto trader take it, or put Trendline Trader on here. If you're using Trendline Trader, it is just tailor-made for moves like this. It really is. You can do like Gary showed here. You can draw the trend line like this, and then when it breaches it, it takes the trade, manages it. Hey, guys, I'm going to step away for 1 second. Gary, can we flip back to you? I'm going to stop this recording. By the way, any questions?
Sure.
Questions on this?
Well, we could probably move to finish up here if you want.
Oh, yeah. Okay, we're coming up on 9 o'clock. Yeah, but any final questions? We got a webinar tonight. I'll get more into depth on this, on how to, where to take these trades and how to trail stops. I did record this past 15 minutes, so we'll send this out to everybody today.